Good morning, everyone. How are you guys doing today? So we are going to talk about our trade from last week. Just a little recap. It's like I just knocked out of the church to do this. But anyways, here we are. So just a little recap from where we stopped um, last week. So let's go to the weekly chart. So here we are on the daily chart. On the weekly chart, actually, we marked out our weekly order block high here, and this should be order block on the daily chart. This is a weekly chart, so we can't fully see it on the daily, but we know that okay, it is like a merge with this down candle here. So the fractality of price makes it more visible on the daily chart. So just put it down, and then here we have like equal highs right now, right here. We have old highs as well here. So we talked about all these wicks here. There are wicks can be gaps as well, and they are most likely going to also be draw on liquidity. So here, so we drop down here, but then our analysis from that last week, it starts from here. We'll go down, we'll see it clear, we'll go down to a daily chart. So here on the daily, see the other block I was talking about from the weekly. Yeah, so it's more visible on the daily, and then you can see there's an imbalance here that it left, came down to it right at the top of the other block. Look at that. See, right at the top of the other block, came right into it, then traded off. So we can always expect to get a reaction from here when it comes back to it. So that's why we said I made mention of how this candle here is like a bearish order block. If it would have been like a complete bearish order block if this candle made a move far below it, like a little bit more, we can still see a return into it. Probability of it returning to it is like 80-20. You understand? Like 80-20. Here is yes, a little something for us as well. So we are looking at how it left from that weekly order block here. So down here we'll go down to for our chart. Our chart is going to show what we talked about fully. So here we're making a low here. We have one swing high locking here. Now we see there was that was CB1 hour chart. Yes, CB1 hour chart as well. There. So it came right. This candle here touched the BC from the daily chart. That's this first up close candle here. It touched the BC from the daily chart, then left into the CB. From the this is the weekly, or this is the BC and also the weekly, BC daily and then weekly order block as well. So yeah, so it left, took out that short term high here, came down again one more time to bounce right into that same VC and weekly order block, which 80% of the time we'll see like a major reaction from it. So he left, enter this balance price range here, up here, down here, balance price range here, had a reaction to it, then comes back into the order block, then trade off. Already traded right into here the IFVG. I think that will be the 1 hour chart. IFVG from the 1 hour chart. Move past it a little, then touch this CB here, from the daily chart. So you touch the CB. One will look at it and be like, how does this? I mean, is what the algo is doing. It's not like it's. Look at on the 2 hours, it forms like a it forms like it's like a failed CISD. You understand? It's like a failed CISD right here. Failed, moved right through it. So yeah, we have February gap here. That it's completely failed. So this is daily. This is from the daily. I want to know if it's going to come lower a little bit into the 1 hour CB. So we'll have 1 hour CB right here. 1 hour CB right here. So which is in line with the top of the CB from the daily chart. There are more here. But right after this one, the one that's next is this one, then this one here. So we'll look at this one here to see. And we also have the end of right at the beginning of the daily CB there. So that's what we have. We talked about how the Swiss and EU, that's Euro USD, how they move inversely, yeah? Like they move inversely. So we'll go to weekly chart here. See what's going on here. So here. Usually weekly, I don't even know what these three lines are, but the market seemed to have expected it, so I'm assuming there's something strong. It's from far away. I don't know what it was, or CB or something. But I know it's a point at which you've touched more time than we haven't than any other place. So we got a reaction and then we traded off it into this here. That there is pretty significant because we traded off, took this low here, took this one here, right into here, then we got a reaction. Like a feel of the imbalance that you left up here. Traded into the bearish, bearish block here as well. So let's go down to the daily. So yeah, trade above this finger, actually taking out all the stops that will be residing there. All the stops that will be residing there. Then came down. That is not coming down because it's This is the daily. We have how many candles here? 1, 2, 3, 4, 5, 6, 7. Most of the time, yeah, 7 candles. Then we'll most likely see a change in direction. Maybe a fake out or a complete reversal. So I'm not saying you should go and be counting candles. It just was there. So here, where are we expecting to see reaction? Right from where the market is right now, because there are old highs there. There's an imbalance right here from the daily. So let's just draw that out quickly. Imbalance from the old highs. Let's see, imbalance from the old highs. So that's most likely get something from there. And if we use a fig, I mean, from the impulsive move here, we can actually do from down here because this is very much started. We do use a fig from the low to the high. We just went below, just a little bit below 50%. From where we have this favorable gap that started the move upwards started. That's what we measure from the bodies. You can also do the wicks. Then there's no issue in doing the wick. We're doing just the wick. It still gives you almost the same thing. Can you see? So, but now we're using the bodies because we feel like that's where the bulk of the move is, not the wicks. Just done. So yeah, just below the 50%, so it's a little bit. Let's go down to the move that would have, made us confirm that our move in this phase was going to be legit. So here we have you have this. So yeah, this is for. So we had this to contest with it, saying if it's going to hold support or if it's going to, give way for the move downward. So let's see. If it doesn't support, it's going to change from a fair value gap to an inverse fair value gap. You understand? So we color to red. Go down to a 1 hour chart. So here is it. So we came right here into it, trade of consolidated as if we do it now did one more time as if it was going to go up and then stopped right on this Sabi here. Then it stopped right on this Sabi, then change direction. Can we see? In this change of direction, in this consolidation here, and if it's supposed to go higher, you most likely not see it have this large consolidation then not go higher. It can as a point, but then you would actually see something that you can trade off of it. I know that okay, this is what is like wanting to play out. You understand? This move here is can never be like a very move that you say okay, this is bullish. With time, you get to understand what I mean. But that's just what I mean. That's just how I see it. It's like it's a thing, not like a pattern. Then we have that change, and then we are also looking at it matching with the Swizzy. So yeah, it came down. Matching with it. Speaking of matching with it, we started from the weekly. Yeah. I wanted to point out something to you guys. Weekly candle here, right here. I also pointed this to you guys. I think in this Swizzy or something. Here's weekly candle here. Most likely we're going to put a week on it. Daily. So see, you can even transpose that to the daily as well. See it here. So now we would want to see it trade right into this breaker here. Here, there's a high, a low, higher high, and then there's a fair value gap. This breaker. This is 2% here. The 70 just below it. A fair value gap here. So my target, my eyes would be here. My eyes will be here. See, based on how much of how much of my checklist is being checked. It's like, see, there's a breaker here, yeah. I just made mention of that. There's a breaker here, also an old high because it's a breaker and there's a swing high, so old high. 62%. That's enough discount for your market. That's wanting to get some form of. I was wanting to pick more orders, so 62% here. Right underneath this is the BC from the daily chart, and under the BC is the 70.5, which is actually a sweet spot to catch moves. The 79 is right there, and the 79 is right on the fair value gap that sent us higher. If we draw it now, you see that it's right there. There is a fair value gap that sent us higher. I will take all this off. I just want to show how most of the times everything just matches. You see that? It's like aligned with the main threshold, fair value gap, and 79% retracement. So those are levels, those are variable. We'll also put our eyes on. This is daily chart, so this is going to take days to unfold, sometimes weeks. You might just keep ranging, and then you get moves all those ranges because you can also see the direction is going on the weekly, and then you follow it to like a daily, and then you follow it to the 4 hour. So this couldn't stop it. This fair value gap couldn't hold it, so it returned into an IFVG. So an IFVG, and it also came and entered. You see the body of this last up close candle. It stopped right there. Then even the down close candle stopped right there. The wick came into it a little bit, but the body stopped right there. Then followed by a candle that just went right into it. After those bodies didn't make it into it, then it just opened and then went straight into it. It might have gone lower. That's why the candle was playing out. But then it's showing that it opened and then found its way in to this, then traded off. So, and if we measure that with the fib, we'll see that we are not that far from having it being an optimal trade entry. So yeah, that is last swing high there. And this is, see, so it came right into the 50, the half of it, and traded off.